Okay, we are recording. Hi there. Good morning, everybody. I am doing this recorded lecture for Chapter 1. As we discussed in class, Chapter 1, we don't have any calculations out of Chapter 1. We don't start on our calculations until Chapter 2. So Chapter 1 is mainly just going over some of the different laws and some of the different documents that impact or affect the payroll process. So I'm going to share my screen with you and get the PowerPoint pulled up. Okay, and so Chapter 1, let me get this out of the way. Okay, so Chapter 1, again, we're going into some of the different laws that impact payroll, and then also some of the different documents and things that we use. Some of these will be familiar to you because we talked about these back in Principles of Accounting 2 when we discussed payroll and the payroll register and the W-4 and the W-2 and right, some of these different documents, but this chapter goes into it as well. Okay, so some of the learning objectives for this chapter: identify the various laws that affect employers in their payroll operations, examine the record-keeping requirements of these laws, describe the employment procedures generally followed in a human resource department, identify the various personnel records used by businesses and the type of information shown on each form, identify the payroll register and the employee's earnings record. So again, some of these will be familiar to you. Some of them, if you've had a job before, for example, you filled out a W-4 before, you've got a W-2 before, right? So some of these will be familiar to you, and we'll look at examples of them. So the payroll profession. So payroll, not only dealing with just, getting employees paid at the end of the pay period, but there's also, several different laws and regulations that payroll people have to be aware of and have to follow as they're calculating and distributing payroll. So as you can see here, and this is from a 2019 Robert Half and Associates survey, the salary range for payroll managers is from $59,250 to $126,250. So, a very important part of the accounting process. And just like we talked about in class together also, that, payroll is really not just an accounting function, but human resources function, in as much as, human resources collects a lot of the documents in the hiring and hiring process, like the W-4, like the I-9, some of these other things that are used in the payroll calculations. So, okay. And then the code of ethics, which we're going to see on the next slide. And darn it, I forgot to bring my book in the office with me, or I'd give you a page number also. But code of ethics sets direction for profession. Here's an example of that code of ethics. So to be mindful of the personal aspect of the payroll relationship between employer and employee, and to ensure that harmony is maintained through constant concern for the payroll professionals' fellow employees, to strive for perfect compliance, accuracy, and timeliness of all payroll activities, to keep abreast of the state of payroll art with regard to developments in payroll technologies, to be current with legislative developments and actions on the part of regulatory bodies insofar as they affect payroll, to maintain the absolute confidentiality of the payroll within the procedures of the employer, to refrain from using association activities for one's personal self-interest or financial gain, to take as one's commitment to the enhancement of one's professional abilities through the resources of the American Payroll Association, and to support one's fellow payroll professionals both within and outside one's organization. As we've talked about before, payroll is an area that you know, when there is accounting irregularities or accounting fraud, that payroll can be one of the areas impacted, whether through, you know, ghost employees and employees that the company says works there, but really doesn't, you know, or incorrectly calculating, you know, the amount of net pay or gross pay, deductions, things like that. So there can be some irregularity or some fraud associated with the payroll function. So it is really important to follow these code of ethics. All right, so some of the laws that impact payroll, and we discussed a few of these in class together. So Fair Labor Standards Act sets minimum wage and maximum hour laws. Federal Insurance Contributions Act, or FICA. And member FICA is not only FICA Social Security, but then FICA Medicare also. We've talked about both of those together before. Income tax withholding laws, both at the federal, state, and local, or all at the federal, state, and local level. Unemployment tax acts, fair employment laws, Civil Rights Act of 1964, Age Discrimination in Employment Act, American with Disabilities Act, and then some other federal or state laws. And so the next few slides are going to walk us through some of these main ones and discuss some of these main laws. Okay, so Fair Labor Standards Act, the Federal Wage and Hour Law of 1938, minimum wage currently set at $7.25 an hour, equal pay for equal work provisions, sets law for employees involved in interstate commerce or in production of goods or services for interstate commerce. And of course, as we're going to get practice with, requires payroll records to be maintained. And like it shows here, we talk about that more in chapter 2. FICA, or the Federal Insurance Contribution Act, comprised of 2 taxes, member comprised of Social Security, and then also Medicare, right? So Old Age and Survivors Trust Fund, that's the Social Security. And then HI, Health Insurance Plan, that's the Medicare. Member Social Security, 6.2%, Medicare, 1.45%, right? Both taxes paid by employer and employee. Imposes tax on net earnings of the self-employed individuals. And we talk about that more in chapter 3. Federal tax withholding laws, so federal income tax and state and local income tax. So federal income tax is on gross earnings, right? Levied on gross earnings of employees, is withheld from employees' paychecks. So the employers withhold income tax, but then they have to turn around and they have to pay that income tax to the United States Treasury, right? Federal income tax payable is probably the account that we would use for that. Percentage formula or wage bracket chart used to withhold tax. So we're going to get more practice with these calculations and stuff as we continue through the chapters, starting in chapter 2. So state and local income tax withheld from paychecks, but then again, the employer holds the tax from the employee's paycheck, but then the employer has to turn around and pay that to the state Department of Revenue. So, state income tax payable type liability is what we would use. The laws are different in each state, and just like it shows here, not all states have a state income tax. So we talk about that more again as we continue through the chapters and as it shows, as it shows here in chapter 4. So, okay. Unemployment Tax Act, so FUTA and SUTA, right? Remember FUTA, Federal Unemployment Tax Act, SUTA, State Unemployment Tax Act. Both of these taxes, federal unemployment, state unemployment, are paid by the employer, right? So the employee does not get any deductions for unemployment out of their paychecks. This is something that's paid by the employer, right? So it's employer tax. So Just like it shows here, FUTA, employer tax, taxes used to pay state and federal administrative expenses, not used to pay unemployment benefits. And then SUTA, State Unemployment Tax Act, mandatory unemployment insurance. For each state, it is different. The Social Security Act outlines standards for each state unemployment compensation law must follow, and then used to pay unemployment benefits. And so we talk about this more as we continue through, and then specifically in Chapter 5, as it shows here. Okay, fair unemployment laws. And again, we looked at, for example, the Equal Opportunity Act, Title VII of the Civil Rights Act of 1964. The Equal Opportunity Act prohibits discrimination in hiring, firing, promoting, or compensating based on color, race, religion, national origin, or gender. Unions may not exclude or segregate members on any of the characteristics listed above. This act also prohibits sexual harassment and applies to all employers who engage in an industry affecting commerce or employ 15 or more workers in each of the 20 or more weeks in the current or preceding calendar year. The Civil Rights Act of 1991, compensatory and punitive damages in cases where discrimination is intentional. And then they have the link here for the United States Equal Opportunity Commission for more information. Age Discrimination in Employment Act. Age Discrimination in Employment Act of 1967 states that employers, employment agencies, and labor unions cannot use age to discriminate. And so and just like it shows here, it basically provides protection to workers 40 years or older. And it applies to employers engaged in interstate commerce with 20 or more workers. And it shows here that there is an exception to the rule when there's an executive that is over 65 years old, that is, within 2 years of retirement. They can, in some instances do an early retirement type plan, something like that. So, again, as any of these payroll records that we're going to see with, the payroll register or the employee earnings record, some of the forms, the I-9, the W-4, the responsibility or the onus, as it shows here, is on the employer to keep the accurate personnel and payroll records. All right, Americans with Disabilities Act, ADA of 1990, prohibits employers with 15 or more employees, employment agencies, labor organizations, or joint labor management committees from discriminating against qualified individuals based on a disability. The prohibition of disability-based discrimination applies to job application procedures, hiring, advancement, termination, compensation, job training, or other conditions of employment. So in these situations, reasonable accommodations must be provided. And just like it shows here, this is kind of a subjective idea, and is subject to interpretation depending on the job situation. Federal Personnel Responsibility and Work Opportunity Reconciliation Act. So this requires employers to report information on all new hires within 20 days of hire to the state agency. Information like name, address, social security number. These are all things found on the W-4. Records are coordinated through Federal Office of Child Support Enforcement. Fines up to $25 per new hire could be levied if the proper paperwork is not submitted. A few states now require same information for independent contractors. And just like it shows here, this is used to help enforce child support obligations when there are situations like that. Immigration Reform and Control Control Act of 1986 law that bars hiring and retaining aliens unauthorized to work in the United States. Employees have to complete the Form I-9. Any one of us, when we get a new job, we have to not only do the W-4, but we have to do the W-9 or the I-9. And the I-9 requires 2 forms of ID. And this is just basically saying, right, that we're allowed to work in the United States. So employers can photocopy I-9 documents. Section 1 of the form should be signed by the employee no later than the first day of employment. Section 2, signed by the employer within 3 business days. And again, this is just to verify that you're allowed to work within the United States and that you have proper identification. U.S. Citizenship and Immigration Services may audit and levy civil penalties for record keeping violations. And then there's a system that your chapter talks about, the E-Verify system that allows employers to check employment eligibility of new hires. All right, Family and Medical Leave Act, FMLA, covers employers with 50 or more employees within a 75-mile radius for at least 20 weeks in the current or preceding calendar year. Employee guaranteed 12 weeks unpaid leave for birth, adoption, critical care for a child, spouse, or parent. Usually what they do, if someone fills out FMLA paperwork, they make the employee, an employer, makes the employee use all their vacation time first, and then they can have unpaid leave for the remainder of the 12 weeks. So just like it shows here, leave may be used all at once or at separate times within 12 months of the event. So whether within 12 months of the birth, 12 months of the adoption, 12 months of caring for a parent or whatever, you use that 12 weeks within the 12 months. Employer must continue healthcare coverage and guarantee right to return to same job or comparable position. Federal tax credits now available for employers that provide paid family/medical leave to their employees. Family Medical Leave Act was expanded to include up to 12 weeks when a family member is on active duty, or up to 26 weeks when someone is has an injury or illness in their line of work or their line of duty. Employers can exempt employees in specific situations, and some states have paid family leave plans. All right, Employee Retirement Income Security Act. This one is legislation that safeguards pension funds and ensures workers covered by private pension plans receive benefits in accordance with their credited years of services or service. Generally speaking, trustees have to, or independent, people independent of the organization have to monitor the pension plans to make sure the right amount of money is being invested to cover the pensions. And usually, I know like at the previous company I worked for, it was 5 years. You'd had to work there 5 years before you were fully vested. At William Woods, I believe it's 3 years, if I'm not mistaken. But, again, that vested means that after that amount of time, you're eligible for that retirement plan, basically. And it just shows you down here kind of in this blue box, like, for someone that has maybe a 6-year vested plan, after so many years, after 2 years, 20% vested, after 3 years, 40% vested, after 4 years, 60%, after 5 years, 80%, 6 years, 100% vested. That's when the employee is eligible for those benefits in full, basically. There are stringent record keeping requirements. Employees are eligible after reaching age 21 or completing 1 year of service. But again, it's based on a percentage of years of service. Employer must file form 5,500 annually, provides a pension benefit guarantee corporation, a federal agency, which guarantees benefits to employee if plan can't pay benefits. Affordable Care Act of 2010. So Affordable Care Act consists of two pieces of legislation: the Health Care and Education Reconciliation Act and the Patient Protection and Affordable Care Act. So this was designed to expand health insurance coverage while increasing benefits and lowering costs. I don't think that it achieved that necessarily, but I guess it depends on who you ask. State-based health insurance exchanges established for those who don't have employer-provided coverage or are ineligible for public programs like Medicaid. Applicable large employees, or ALEs, with 50 plus full-time employees are required to report on the 1095C, which employees are covered by the insurance, so to both the full-time employee and the IRS. This form, this 1095C, used to be required, for a few years. It was required when we filed taxes to prove that we had insurance, because if you couldn't prove you had health insurance, then you got charged kind of a fine or a fee for not having health insurance. And so this form was given both to the employee and to the IRS. Small employers, less than 50 employees, can purchase affordable insurance through Small Business Health Options Program and may also receive a tax credit if they pay at least 50% of the cost for premiums for coverage of employees. Other state laws like worker compensation laws or disability benefit laws. So worker compensation laws protect employees and their dependents against losses due to work-related injury, illness, or death. Most states require employers to pay employees premiums. Can self-insure if state approved. Remember that self-insure, that's not really setting up like an insurance plan or buying an insurance policy. That's just basically saying, we as a company are accepting all of the risk, and if this happens, we'll pay for it out of our own pocket type thing, self-insured. The company bears all risk itself, different premiums based upon job class. So what that means is if it's a industry, like let's say the fishing industry, where people get injured a lot, they're going to pay higher workers' compensation premiums, right? But if it's like an administrative facility, administrative offices, and there's not a big risk of injury in the office, they're going to pay a lower worker compensation premium, if that makes sense. And then state disability benefit laws. Some states plus Puerto Rico have established laws requiring employees to provide disability benefits. This applies even if the disability, illness, or disease did not arise due to employment. So 5 states plus Puerto Rico. All right, human resource and payroll accounting system. So again, some of these, like the payroll register and the employee earning record, we've gotten practice with before, and we're going to, of course, get some more practice with it as we continue through the textbook, starting with chapter 2. But just like it shows here, it's important for human resources and the payroll department to keep accurate payroll records that meet the federal and state law requirements. The payroll department performs accounting functions that can be under direct control of the CFO, which is more or less kind of the accounting finance department. But as we discussed in class, it can also be under the control of the human resources department. So it just kind of what makes sense either way, whether payroll is mainly under the accounting and finance, or if they're mainly under the human resources department, they have to work closely with both of these departments, right? So payroll people have to be able to work closely with the accounting and finance department, and then also the human resources department. Okay, human resources system. So, again, we're going to get more practice with this once we start in chapter 2. But when we think about our human resources system, there's some things that we have to have and that we have to keep for each employee. So just like it shows here, there are procedures. Human resource has to set procedures for recruiting, selecting, orienting, training, and terminating personnel. The Fair Labor Standards Act requires record keeping, stringent personnel record keeping. Job descriptions must be clear and accurate. Requisition for personnel notifies HR of need for new employees. Application for employment, and it tells you where you can look at examples of this on, in our textbook, should be completed by persons seeking employment. Pre-hire inquiries can include questions on gender, national origin, criminal background, etc., only if there is a bona fide occupational reason. Background checks must be in compliance with the Fair Credit Reporting Act, which an employer has to notify you that they are going to do a background check on you. They have to have your permission to do that. Aptitude and psychological testing only lawful if related to job performance. Employers should consult state law regarding drug testing. Most companies, especially when you're, looking at some of these higher paid positions, and you're kind of getting more into career type positions rather than jobs when you're younger, and the local gas station might not do a drug test, right? But once you kind of get further into your career and you get more into these higher paying positions, most companies do drug testing nowadays. Okay, so there are, or there should be, safeguards in place to prevent lawsuits. For example, accepting applications only online kind of helps to take away that, possibility of discrimination. Having person not involved in interview process review the application. So, you might have someone who does the face-to-face interview and then a different person reviewing the application, so that, again, that eliminates some of the possibilities of discrimination. Using applicant screening software so that it's, an algorithm that separates the good resumes from the bad resumes or unacceptable resumes. Some states now require a formal job offer to be extended before talking about salary or benefit history of applicants. So this just means that, they can't necessarily say, well, how much did you make at your old job, right? They have to at least offer you the job before asking that question. Application must be kept for 1 year. Reference inquiry conducted before employment. So due to the amount of litigation in this area, respondents should only verify facts and not offer subjective information. Really diminishes credibility of reference inquiries. So prospective employer may require applicant to sign employment reference release, so they're allowed to ask your previous employer certain questions. Some states have passed laws providing protection from liability to employers who want to provide references. Hiring notice alerts payroll department to add new employee. Employee history record contains performance evaluations, compensation adjustments, disciplinary issues, performance appraisals, etc. Employee must have access to his or her HR file. Termination of employee may be at will or for good cause only, depending on the situation. Change in payroll rate form notifies the proper department of a change in the employee's rate of remuneration. And various and other forms also exist to document internal transactions. Again, as we start to go through some of these exercises and problems, we're going to get practice, for example, when an employee gets a raise and how we need to update our payroll records with that information and change the information to do our new benefit or our new net pay calculations and things like that. So. Okay, payroll accounting system. This system encompasses procedures and methods related to disbursements of pay to employees. Two basic records are inherent in this system, and we're going to talk about these. And we've seen them before, so it shouldn't be too new to us. But again, we're going to get more practice with them. But when we think about the two basic records, are the payroll register and then the employee's earnings record, right? So the payroll register includes all employees, all the information, all the gross pay, all the deductions, all the net pay. The employee earning records is just one employee's earning records, right? So when we think about the employee earning records, all the employee earning records, say we got 40 employees, all 40 employee earning records should add up to our payroll register, right? It's kind of like the payroll register is kind of the main document, and then each employee is kind of the sub documents that add up to that. And so we see that payroll register here. Again, the payroll register compiles data per payroll period, provides information for recording payroll entries and preparing payroll reports, used to compute gross pay, deductions, and net pay. Again, if you guys had me for Principles of Accounting 2, this is very familiar to you. We did a lot of practice. We got a lot of practice with this in chapters 7 and 8 in Principles of Accounting. If this is not so familiar to you, don't worry. We're going to get plenty of practice with it in class together. So, all right, employee earnings records. Again, the employee earning record is just for that individual employee for each week of earnings. So updated after completion of the payroll register, excuse me, outlines earnings per period as well as cumulative earnings for each employee, used to compile data for a multitude of reports. So, we use this employee earning record, for example, at the end of the year to compile the information for the W-2, right? The W-2 shows all earnings for the entire year for that company, for that employee. And the W-2 is what we use to file our taxes, our personal taxes at the end of the year. All right, outsourcing payroll. So for a small to mid-sized company, it might be in their best interest to outsource payroll. And so some of the big payroll names or the big payroll organizations, ADP, if you've ever heard of that, Paychex is another one, but some of these big companies that's all they do is calculate payroll and do payroll. So, if we choose to hire an outside company to do our payroll, then that's a form of outsourcing, right? So reduces risk of unpaid payroll taxes because whatever company we hire to do our payroll is going to handle kind of that whole process. So we would want to hire only bonded providers. This also, even though they prepare all the forms, we still have to sign off on them, right? Tax correspondent to be sent to provider, requesting regular IRS transcripts of company accounts. So, some of the provisions or some of those stipulations that can be put in place to keep us better protected. And if we remember when we talked about, internal controls, and we talked about the ARC and how we want that ARC around us. And by ARC, we mean, authorization, recording, and control, right? So if we have these things, that separation of duties, by having an outside payroll company, it helps us to have those separation of duties, especially in small and mid-size organizations. Okay, let me stop sharing this. Hi there again, everybody. Okay. Yeah. So I know I went through that pretty quickly. We don't have any calculations out of chapter 1. So we're going to spend, a few weeks going over chapter 2 when we start on these calculations. And I'm looking forward to that because, that's my favorite part. So remember that if you have any questions, once you're able to view this, if you have any questions, please let me know. I will see you guys soon. Bye-bye.